All right, hello, welcome and good evening, traders. Hey, it's Monday, 11/3/2025. We're into November, so the month of October is gone. Good month for us. In the Income Navigator account, I was up 19,636 for 5.37% gain on the portfolio, so that was good to see. And so had another good month. We were up a little over 4% last month and about 4% the month before. So really one of the best months of the year for me from a trading perspective standpoint. And you would expect that to be the case, right? Markets are near all-time highs. You should be doing extremely well at these point times. Again, a bull market makes everyone look like a genius out there. So anyway, that being said, good stuff. Let's get into it. I'll share the accounts. I'm going to get into some income ETFs tonight, a little different from my normal, but we're going to take a look at a few trade opportunities, but then we're going to really focus on the investing account. And 40% of the investing account is in these income ETFs. Show you what I did today, made some moves in that account, and want to give you a sense of where I am with those. All right, so something a little bit different from me, but I'm always hoping to share what I'm doing. If you get something out of it, fantastic. All right, so let's take a quick look at the markets today. So ES itself was up a little over $8 on the session today. Nothing big going on out there, just another kind of sideways consolidation day. Not bad. MACD continues to start to roll over a bit. RSI is kind of just slowly ticking up there, but it's at 61, so we're not overbought at all. We still have some ways to go. I think we did touch 7,000 at one point during the day on one of the E-mini contracts, but not the current one. So, I think that's still the goal. I still think we're going to hit 7,000 on the current E-mini contracts. So we are not far away, about 118 points away from that. So not there yet. All right. So things are bullish. Things look great. Squeeze is firing to the upside. Eight's above the 21, stocks above the 21, bullish PSAR, everything bullish. No reason to get bearish here, and no reason to just hunker down, hide in a bunker, and expect the things to implode. I think you got to be cautious here, and I don't think you need to empty the bank account and buy everything there is. But I also don't think you need to be at like 20% buying power either at these levels. If you are, you've been missing out on just an unbelievable rally being scared. And I think that's why there's still more room to the upside is a lot of people playing scared out there. And I think right now is when you really all along here, you should have been just taking advantage of what you see, not going crazy, not mortgaging the farm, not doing everything on massive margin and stuff. Just take advantage of low IV, okay? Stocks moving higher. Yeah, as a premium seller, yeah, low IV, it's not great, but you keep winning your trades. So you keep putting naked puts on, even in low IV market. If the market's still bullish and going up, you're still going to win. So I'm not, person in that camp where, hey, low IV, don't trade. We only want 30 IVR or something. If you do that, you won't make any money. I think you still go out there, you still have the same probability. Okay, 7 delta is 7 delta. Whether the IV is 60 or the IV is 20, 7 delta is still a 93% chance of being successful. Okay, what IV does for you is A, can speed up the time that you're in that trade, and B, can sometimes enhance the credit that you're receiving, but it doesn't change the odds of that. So with the trades I put on, I like to be a little longer out in time because days, once you exceed 60 days trading, okay, so if you're selling puts outside 60 at 90 or 120 days out, once you exceed 60 or higher, then the expected move, okay, is typically going to be greater than the actual move. Okay, so what does that mean? Well, that means if I'm trading 60 DTE naked puts or 90 DTE puts, which is where I am on my Strangles, that's where the realized move is going to be less again than the expected move. Okay, so you're taking in credit, and typically you're not going to exceed those moves. Okay, and it doesn't have anything to do typically with the IVR at the time that you put them on, because the longer you go out in time, the more of that expected move, that more extrinsic value you're going to get, and the smaller the move is, because the markets typically price risk out much higher out in time. Now, if you're trading weekly, monthly, whatever, then it's going to be the actual opposite. Okay, typically with weekly and monthly trades, the realized move is greater than the expected move. Okay, which is why I don't like trading very short term options except for covered calls. Anyway, there you go, a little something from me. And you may agree, you may not agree. It's all good, but that's how I like to trade, and I like to use those 60 to 90 DTE trades on most of what I do because I'm getting paid better. The move's not typically as great, and I don't really have to worry about IV quite so much. All right, let's take a quick look at what oil did today. Oil was flat to up just slightly on the session. Perfect, great for our strangles. We were up bigly on our strangles and Jade Lizards today and our 112s on oil. So oil continues to just kind of trade sideways, which is where I expect it to be. Overall, it's in a downtrend on the short-term perspective here on the daily. Things are in a little bit of an uptrend to sideways. I like our trade setups on oil where I am right now. Gold holding in right there at the 38.2 fib on this pullback. This has been an area between really the 50% retracement and the 38 that we've just held on to. I can probably take these fibs off now and we'll leave them. You can also see the anchored VWAP dating back to this August 20th level has also provided support. You're also at the 50. I love the pullback on gold. I think this thing goes higher. If you read the comments from Jamie Dimon, it goes a lot higher. It doubles potentially from here. So I think that's really fantastic. And I want to be long gold, but I think right now where we are sets up well for 112s and strangles. Our 112 is up 71%. Our strangles up 28% in 4 days. And then I've also got a BA 111 trade, which is the longer trap trade. That thing's up 125% in 25 days on gold. Beautiful. So love where we are on gold, setting up great. We're making fantastic money on those. And then if we take a look at bonds here, these continue to pull back, which is exactly what we expect, because I do expect that rates for the 20 and 30 year are bottoming a bit in here. I don't see rates dropping a whole lot more. They're not as tied to the Fed funds rates as well. And if the Fed's not moving for a while, then bonds obviously should sell off a bit because rates aren't going to drop so much. So I think all of that stuff makes sense, but I think it sets up well for some strangle trades. We're actually in a strangle. We are up just 2% in 4 days since Friday on that thing. So no big deal on it, but I think it sets up nicely in here. But I want to be in TLT or bond strangles. I also want to be selling puts down here. I would absolutely take assignment if you want to jump into TLT or something here. I would love to have assignment somewhere right around this 100 to 200 day moving average is right around 88. I think that's where you potentially sell some puts. And if you get assigned, I think that's a great area. If you want to be a little safer, you can maybe even go down to this 86 level. I think that's a good solid level where we bounced a number of times as well. But I don't see bonds falling a whole lot. I think they will inch their way higher. But right now, bonds moving sideways to lower. I think it gives you an opportunity to sell some puts and I think to put on some strangles here on TLT. All right, that being said, we'll rip through some of the stocks. Amazon just off and running. This thing is going bananas. We're in it. We're long. We've got leaps letting that go. Nvidia doing well, kind of just sitting here. Earnings are on the horizon, but this thing has just done so well. I think it just hangs in here at these levels. It's going to really have to beat hard. I would want to see a pullback after earnings, and that would be my opportunity there. Tesla, I've been calling this one out in Twitter and with our members as well. I talked about it being in a consolidation phase. It's been consolidating now for over a month and now starting to make that breakout move. Good RSI, squeeze firing everything looks good for Tesla to keep going. Meta, 3-day rule in effect. You've had 3 down days. So if you bought in here, okay, that was not the time. If you bought in here, that was not the time. Okay. Don't be first. I posted this in Twitter. Okay. The 3-day rule's in effect. There's no reason to jump in and be first. Okay. Get it, get that in there. Look for the turnaround. Okay. Does it look here like RSI is turning up? No, it's still falling. Does it look like MACD is finding a bottom? No, it's still falling. Does it look like squeeze is reversing? Actually, no. What's happening on the squeeze is it's actually triggering a downside sell. Okay, so squeeze looks bad. Okay, PSAR went bullish. Okay, the only thing here that would make you think that this was a good area to buy would be you're outside the Bollinger Band, but the Bollinger Band's falling at like a 60-degree angle. We could ride that thing down a whole lot further. Okay? Don't but you do what you want. Okay, I'm not getting in right now. Okay, this does not look like it's done. However, what is positive here is the fact that volume has dropped all 3 consecutive days. So it could be running out of downside volume. I think that could mean that maybe we get a turnaround in the next couple days or so. And I still think we will, but I don't need to be first. Okay. If you got in back here at 668, okay, it closed at 637 and you lost another 50 points. Okay. You lost another 8% or so in this thing. Don't be first anyway. That's all I got to say. Google looks good. It's a little far gone. I'm not touching it. Palantir looks good. It's a little too far gone. I'm not touching it. You got Hood earnings coming up and here. Sideways consolidation. I like the way this thing's setting up. Netflix, maybe trying to base out here. We'll see. But this gap down again, the 3-day move was in effect. Still down, then another down, then another down, then another down. Then it tried to get something going. Okay. And so maybe the squeeze is getting long. Okay. Volumes maybe starting to pick up on some of the buying activities. Now we're touching the 8. Okay, maybe on Netflix. Don't rush in on these things. Craziness. Next thing here on Broadcom, I love the pullback on this thing. We're a ways out on earnings, so we don't have to worry about it. We're doing an income plummet covered call on it. That thing is performing extremely well right now. Love the pullback. This is all good stuff. Maybe we'll fill this gap. Maybe we won't. But gaps typically do get filled. All right. And then SoFi here, looking nice, moving higher, bouncing off the 8 and the 21-day exponential moving averages. Watch this thing, sideways consolidation here. It may take off. And then lastly, crypto having an ugly day today, pulling down near some supports, near the bottom of the Bollinger Band. Okay, strategy, same type of thing. It's in this downtrending channel, bottom of the Bollinger Band. Down at bottom, but you got a 2-day squeeze reversal triggering here. This actually might be a good opportunity. But again, you don't have to be first to get in on this down move. Okay, wait, chill out. Okay, maybe it'll reverse here. Okay, and things are starting to look better for some bottoming action. And I love the fact that Bitcoin has been selling off. Now, Ethereum here really selling off, breaking some supports. Doesn't look really that great. Tried to get a squeeze reversal, didn't work. Maybe you're at the bottom of the Bollinger Band, finding some area there. And then Bitmine would be the play on that for me. I'm in it. I'm okay with it. I think it's getting overextended to the downside here. Could have a little more downside to go. And then I think you just wait for the signs to get in. All right. That being said, let's jump into just some of the income ETFs that I'm in, and we'll wrap up with this today. And I just want to share what we are doing. And these are the income ETFs that I'm in. Give you a sense of my allocation. So if we look at the allocation here, 30% of the money or funds that I'm looking to put into this, and I'm looking to put roughly 40%, okay, of the account into this. So we're going to put a little over, roughly around 40%. We'll get into this account at some point here. Now, that's 40% of the 60% of the total account. So it's not of my total account, it's 40% of my allocated amounts that I'm going to be investing here. So 30% of what I want to put in here is going into SPY-I, NEOS fund. I like it. Very little NAV erosion, performing extremely well. Has a pretty good distribution going. Okay, not out of this world. Nice, not overly bearing. You're not seeing massive NAV erosion. I want to have about 30% of all of the money that I've put aside into that. And right now I'm right at that amount. So I'd like to be in there. I've put in about $72,000 into SPY-I. I also want to have about 30% in QQQI. Yes, there's some overlap. QQQI, though, it does give you a bigger percent return, has a bigger distribution, slightly. Uh, Even though there is overlap between the two, I want to have both in here. So 30% of all of the income ETFs is going into QQQI. Now, I added some more today on this. I added another 500 shares, doubling my amounts. I'm at 21.5. I'm still not where I want to be, but I'm okay for now. BTCI, another NEOS fund. I want to have about 15% in this Bitcoin. Now, this thing pays a much higher dividend, and I don't want to be overly weighted on Bitcoin, but I'm very bullish on Bitcoin. I'm sitting at currently at 21% of the funds that I'm allocating towards income ETFs into BTCI. It's a little higher than I would like. So I'm a little short on QQQI, a little higher on BTCI, just the way it's been allocated right now. Not too bad. I'll take that. All right. Next, I'm in WPay by Roundhill. Yes, much more aggressive fund. It's a weekly payer. It does not use covered calls. It trades swaps, and it uses its own funds in the Roundhill universe to pay out. So it's a great payer. It's a weekly payer. We got into this thing. Uh, right now, I've got 10% in this. 5% is the goal. So I started out, it's a little heavier than I want to be, but I'm okay right now. As funds come in and I'm reinvesting, I'll be putting them in the other ones, and it'll start to even out the actual allocations as I go. But this thing's been paying nicely. Okay, been paying a good 1% a week or so. I'm going to take that and we're going to run with it. So we've had two distributions since we've been in there for almost 679 bucks so far. And this thing's hanging in there pretty well. I like WPay. I like where it is. And then lastly, GPIX, which is an income fund from Goldman Sachs. There's GPIX, and I believe it's GPIQ. I will probably get into both, but this is more of the S&P type version. Yes, there's some overlap in here, but it is a much different, much safer fund, a little bit lower payout. Okay, but I'm allocating about 20% in here. I'm up to 16 because I added another 400 shares today. So we'll see how it goes overall. So far, I've been tracking this. I just started putting this tracker together a little bit more, so I don't have some historical data. But uh, back in September, we made 5,600. In October, I took in $6,400 using around $211,000. So about 3%. Now, that's not using margin. If the margin on these, okay, the total margin on these is around $103,000 of the account, okay, is what I'm using from a margin perspective, not the cash perspective, even though I'm tracking the cash on cash return. Okay, if I would calculate the return on margin, okay, so far I've returned about 25% this year and 6.21% last month. So uh, because margin is about half of what the cash value is. So there you go, a little bit of an insight inside the covered call ETFs, or really the income ETFs, because they're not all covered calls that I'm trading, but they're doing very, very well. I can't beat the returns on these things. They're doing fantastic. I don't even know why I want to, try doing continuing with the poor man covered calls and everything else, even though those are doing so well. These, I just don't need the management in there. And what I'm going to slowly do, and I'm not retiring yet, so you can't get rid of me yet, but I'm bringing down my leaps and investments little by little and increasing my income ETFs. Okay. Eventually, probably in the next 2 years, uh, they're pretty similar, but you're going to start seeing the income ETFs, okay, start to take a hold of more of that account, especially once we get a sense of how do these perform in a down market, maybe 2026, 2027 will be a down market. Who knows? I want to see how they perform in a down market here. I want to see how they sustain their net asset value over time. I want to see how they sustain the distributions that they're giving over time. And if the ones I'm in prove themselves out, okay, then again, I'm going to start at, converting more and more in the investing account, not the trading account. Trading account, we're doing great. We're going to keep cranking on that. We're having some fun. We're doing great. I'm enjoying it. So I hope you got something out of this. If you like this video, go ahead and click the like button down below. Give me the thumbs up, and let me know if there's any questions that you have. If not, there you go on the income ETF. So SPY, QQQI, BTCI, all from NEOS, which is my favorite fund companies there. Then WPay, giving me a little extra something something in that account, and GPIX, giving me a little bit more stability in that account. Plus, plenty of cash, plenty of leaps, plenty of poor man covered calls to even out that account. And that's the goal. All right. We'll see you guys. Have a great rest of your evening. We'll see you later. Bye bye.